Hi, this is Sam, a CFD dealer, and welcome to this week's market commentary. U.S. stocks rose on Wednesday, sending the Dow Jones Industrial Average to the highest level in 5 years, adding 175 points to close at 14,075. As better than estimated housing data bolstered economic optimism, and European shares rebounded amid gains in Italian bonds. The broad-based S&P 500 index rose 1.3% to 1515. The 30 stock gauge is 0.6% away from its October 2007 record. The gains came after reports showed U.S. pending home sales rebounded sharply in January to the highest level in almost 3 years. Orders for U.S. durable goods, excluding transportation equipment, climbed in January by the most in a year, indicating business investment is holding up. The rally is driven by improvement in business confidence, sentiment from Europe coupled with positive data, and Italy's successful government bond auction of €6.5 billion, although at a higher borrowing cost, but taking away some of the heat of the inconclusive election that happened earlier this week. Federal Reserve Chairman Ben Bernanke said that the central bank has the tools necessary to scale back record stimulus and avert a rise in inflation expectations, while previously he has already reaffirmed that the policy of quantitative easing has the support of a significant majority of top central banks officials and will continue till necessary. Political parties are still trying to reach to some negotiation to avoid impending first-month sequestration, which will kick in spending cuts of US $85 billion, although the efforts from both Democrats and Republicans seems to be half-hearted and unlikely to reach any conclusion. STI closed on Wednesday up by 6.86 points to close at 3258. Now for coming days, 3250 will act as a major support zone because if STI break this level, then it will be more bearish and can touch 3220 or 3190 levels soon. While the immediate resistance seems to be at 3285 and above this level, it may take resistance at 3300 or 3315 levels. The yen extended its decline for the month, while the Nikkei 225 stock average closed 2.7% higher for the longest monthly winning streak since 2006, mostly due to the appointment of Asian Development Bank President Haruhiko Kurata to lead the nation's central bank, raising the likelihood of further monetary stimulus this year. And also the official data showing that Japan's industrial production grew 1% in January, expanding for the second straight month, adding to evidence that the export-reliant economy is pulling out of mild recession. Hang Seng Index edged up 0.3% to 22,577, while the China Shanghai Composite Index jumped 2.4%, led by property developers after China Vanke, the country's largest developer by sales, reported a 30% rise in 2012 net profit. Australian shares ended firmly in positive territory as investors were reassured by Bernanke's dovish comments and a smooth Italian debt sale. The benchmark ASX 200 rose about 1.3%. India's benchmark CNX Nifty was up after Finance Minister P. Chidambaram presented a so-called responsible budget for 2013, increasing some corporate and individual taxes in an attempt to reduce the fiscal deficit to 4.8% next year. Currently, almost all these market indices are available under our CFD indices list, plus many more benchmarks based on different strategies are available via ETFs for you to trade with Phillip. This is all for today. Hope to see you soon with another round of market commentary.